Today's number is a bit of a special one, 1,065. The average time it takes for crypto and Bitcoin to bottom and then top once again. And guess what, guys? We are now in the 1,050s. So there is a massive decision to be made by this particular asset class over the next few weeks. Are we in a Wyckoff blow-off top, or are we just beginning a new style of cycle? Well, in today's video, we'll try to understand that a little bit more into what is going to be another couple of volatile weeks. Netflix, Tesla, and then the Magnificent Seven. What exactly are we looking for this earnings season, and why could it be one of the most important yet over the last couple of years? With the S&P 500 almost at all-time highs, the NASDAQ pressing the resistance, it's clearly going to be a very important next couple of sessions. But maybe more importantly than any of this is the phenomenon on gold and silver and other precious metals. If you're new here, don't go anywhere. We've got a lot of the stuff to discuss, whether you're a stock, commodity, or crypto trader and investor. See you soon, guys. Well, welcome back everybody to The Daily Show. My name's Thomas Atkinson, and in today's video, we're covering the latest macro, the big data, and of course, the key money flows. Because boy, oh boy, have there been some big ones over the last couple of sessions. From volatility to maybe a recovery, the banks now are moving back up. And the latest data shows us that maybe delinquencies are actually starting to look a little bit better. But realistically, like we said on our weekend video, check that out after this if you haven't before, there is a darker, more sinister debt that is surrounding the markets and may end up engulfing them. The problem is going to be, though, the timing. And as you guys know, timing is everything. With Apple leading the charge over the last 24 hours, it's clear to see that risk on was the play. But let's talk about one of the big stories that's becoming super popular, and that is the story of course, Bitcoin versus gold. Now, you guys would know if you've been watching this channel for a long time, I've been a huge gold proponent for the last couple of years, particularly since around 2023. And some of the reasons were that I thought it was an incredibly undervalued quality asset class. Well, now gold seems to be taking the limelight with silver of 2025, and it's got many people saying it's time for Bitcoin to come along. If you're not familiar, generally speaking, what's happened is gold has often rallied first. It's then started to go into kind of what we call a pit or a pullback in time, and then we basically see Bitcoin start to resurface. And we've just had interviews with some of the biggest Bitcoin bulls coming out, including Tom Lee, and he's claimed that by the end of the year, we might be seeing 250,000. I'd love to see your opinions of where we're at the end of the year. Will we be up? Will we be down? Are you going to go for 150, which is more our kind of price? Or are you going all the way down to Bear Town, somewhere around 30, 40? Let us know in the comments down below. Always interested to see your opinions, guys. So because this is becoming so popular, it is one of those things that becomes a little bit contentious. We have people like Scottie Pippen. Yes, that's Scottie Pippen. We mentioned in the last video, claiming the 50-day moving average here, 50-week moving average, and basically saying, look at this thing. This is exactly where we have seen every time Bitcoin rally over the last year. I didn't know he was so into this, but clearly he is because a lot of people are following this, and it is one of the key reads. But we've got some more later on today's charts that I think you want to be looking at, particularly when it comes to anchored VWAP, one of my favorite indicators in the market. So where is the problem? Well, it all has to do with this. Now, of course, Bitcoin is following the general thought process of the law of diminishing returns. People always think that it's going to be bigger than the last time. That's not going to happen. As an asset class basically matures and becomes massive in market capitalization size, the gains drawn from each cycle are going to be less. And that's pretty much always the way it works. The other thing that's really important to note, though, is that we've been following a very specific cycle, particularly for the last two times. And you can see here what happened in 2016 into 17 run seemed to happen very well into 2020, into 21, 22 run. And they all seem to stop somewhere around here, about 550 days into the halving cycle. Indeed, was around the peaking of previous Bitcoin cycles. So if that's to be true, then we could be in the danger zone right now when it comes to these markets. But let's take a look at how it looks when we break down the bottom to, of course, the top and how long that can go for. Now, I like this chart. We've done it a few times. I've obviously made charts similar to this. This one here's from Brett_Eth over on X. And, you know, one of the things that I always like about it is the simple shortness of it all, but also how amazingly accurate it's been so far. 525 days up, then of course we've got the decline, then we've got the recovery, and each one of these has taken, around 1,065-ish days. Now, why is this so important? Well, it really has to do with a repeatable process. And I think the problem sometimes with these repeatable processes is that when it becomes so well known, they break. And this must be maybe one of the most studied cycles of all time at this point, with how many people are so bullish, of course, in the cryptoverse. Now, I do still like it, and I think that there is still more to come for Bitcoin. And one of my main reasons is, well, there's two main reasons. One, we've got the Federal Reserve talking about crypto. Two, we have Wall Street shenanigans. We haven't seen an alt season, so obviously they usually last on average around 46 days. Very important to note if we do see an alt season. And we haven't seen the rise of tokenization becoming such a big storyline. Generally, whenever you're going into a bubble, you need a new technology or some concept. And it's not just going to be AI this time around. I think it's the tokenization. And then the last one is the Texas Stock Exchange. So if you're not familiar with that, that's like a deregulated stock exchange coming in early next year, kind of launching at the end of this year. And I think all of this stuff is going to help the cryptoverse along with the exchange traded funds that we're going to see most likely approved. By the way, there's a lot of catalysts in the back of October as well. So one of the things that's probably most interesting about crypto is when the good news starts rolling, everyone gets hyped. It reminds me so much of Tesla. You know, if you could kind of characterize Bitcoin and Tesla together, to me, they're kind of very well linked. Tesla goes into a hype cycle. Remember, it's always like, oh, everything's all terrible. And then suddenly it's like, we've got flying robots, guys. And then the market goes up. And then it's like, these flying robots are going to be ready in 2 years' time. And the market goes up more. You know what I mean? It's the hype cycle. And that leads, of course, into options. And options are something we cover on this channel in about the middle of usually the video. And particularly for Bitcoin, it's become one of the most traded options, just like Tesla. So it is so good to look at the options market when you're doing your analysis, especially for short term on Bitcoin. So let's have a look here at this cool chart again to take a look here at where we're at. So we know that we're getting up there when it comes to the halving to the top. And this is kind of scary when you're looking at it because it could mark a very important point here. Now you'll notice the price it was taken at. Obviously, we're a little bit further along here. So we're starting to get into this kind of territory. But you can see here, top to top, very similar. Bottom to top, very similar. And of course, bottom to bottom, well, yeah, that's going to happen in the future. So why is this one potentially different? Well, we're going to have every single consideration out there being put on because even this chart, Bitcoin to gold, kind of looks a little bit negative. So you can see here, we've got this kind of ratio at around 36, which generally has been telling us in the past that Bitcoin's getting a little bit expensive versus the other asset. Remember, I think they're both stores of value in some ways. So, you know, to me, Bitcoin and gold have similar processes. But what I would also be looking at is I'd probably chart this if I was you guys, and we'll chart it and, of course, alert you to it. But if it gets past 36, 37 as a ratio, I think that could be an explosive move for Bitcoin because this is a super important chart. You can see how much it's tapped out at this level before. Now, of course, the argument here is this some kind of head and shoulders with a neckline like that? It's possible. If that's to be the case, then, of course, it's going to be Bitcoin risk off, gold kind of hovering. Remember, gold could just go sideways, Bitcoin risk off. It's a very interesting ratio. And again, there are other interesting ratios we'll bring up over the next coming weeks, particularly with Bitcoin versus S&P and all sorts of things like that. So where do we think Bitcoin's at? Well, it's my opinion that it's really all about those positive catalysts. Bitcoin has now got Wall Street in it. And when Wall Street enters the chat, we know what that means. Stop loss hunts, shenanigans, all sorts of leverage opportunities, and more importantly, storylines that come out that create that kind of mass adoption that you usually see in the Bitcoin markets. Remember, when somebody, and not to put ageism in here, but often when somebody's really old, they definitely don't know about the tech, like 80, 90, maybe even 95. If they're talking Bitcoin, you know it is a saturated market. It's like that old elevator pitch thing when you're sitting in the elevator and someone's talking about Bitcoin and you just know by the look of them, they're not no investor, you are in problems. So that is kind of what started to happen here with gold. But let's talk about this chart here. It's from Steno Research. I mean, I look at that and I go, wow, that looks like a parabolic rocket ship. But basically, China's gold stock levels have, of course, been rising up. And a lot of people are asking, What are they prepping for? Guys, it is a currency war. We are in a currency war. We are in a very weird time in history that in some ways you don't want to be part of because these often can get quite nasty. But just remember, when you look at this type of chart or any of these charts, it's just the beginning. We really probably arguably got into this somewhere in the early 2010s, but it often takes around 20 years to go through. So yes, there's all sorts of things going on right now. So if we believe, let's say Bitcoin could still be good, and we'll look at the charts later on in our own thoughts, what about gold? A lot of you are saying to me, Tom, you're saying gold's done. No. I'm still bullish gold, guys. I'm just thinking that gold is getting upwards of a very volatile period. Remember, it's moving now on average per day, something like 3.5%, 4%. That is not normal. You know, you guys have traded gold. It's like watching paint dry sometimes. So one of the things is that when it accelerates like this, it is something to be a little bit concerned of. Now, of course, extreme acceleration looks like this. Look at the 1970s gold bull run. Look at the way that often these bull runs end. But we still need to be aware that when you go into these kind of hyperbole periods and you get really aggressive kind of RSI here, you can see, actually, that one looks so much like the same. I gotta say, look at that. Look at that beautiful pennant. Look at that length. Damn, guys. Do anyone else get excited when you see beautiful technicals? That's a beautiful tech. I love that technical right there. I just noticed it, but I was loving it. If I was there trading that one back in the day, I tell you what, we'd make a little bit of money, wouldn't we? But that looks just like this one over here. It's the exact same thing. Either way, when they accelerate like this, often there is someone needs to be paying the piper. So I do think volatility is just around the corner. Silver had a massive transaction. We'll look on it. And of course, we'll check that out in just a moment along with the charts. But just keep that in mind. It has gone very quickly, very fast, and everybody is now aware of it. Not a good sign generally. Let's talk about CNI loans. Now, this one here is from Torsten Slock. And basically, he's found that delinquency rates and charge-off rates, they're starting to go up a little bit here in the CNI loans. But what I found interesting is that credit card delinquency rates, according to him anyway, may have peaked. Now, I'm not sure about this. This has obviously been a chart a lot of people have bought on and said, oh, see, we're in a recession. Oh, we're in a crash and everything like that. Credit card delinquency rates are not a lead indicator to generally cause a recession, okay? There are bigger debts in the world than credit cards, and those are the ones you need to be focused in on. But still, interesting to see it declining a little bit here, particularly while we've seen those Fed rate cuts coming through. So, yeah, very interesting period here when it comes to delinquency rates. But what I'm starting to notice is a lot of these are coming off the book because they're getting repackaged into something else. Does that sound familiar? It's a repackage fest, guys. Not what we want to see. It's very bad on the horizon. You just know something bad's going to occur over the next couple of years. Why? Because we cannot repackage trash debt, claim it as AAA again, and then it's all hunky-dory. Eventually, that kind of catches up. Now, over the next 24 hours, we have a couple of big news announcements. Obviously, we've got Netflix, which will be in focus. We'll cover that in our post-show of Tuesday. And then, of course, we'll also do a pre-show for Tesla because I think Tesla is going to be probably a very good read this week along with Intel. It's next week that really brings the cheese in terms of the biggest ones. But just remember, earnings season is volatile. Tesla could move upwards of ±9, Netflix ±8. And more importantly, that generally speaking, we're seeing a kind of, I guess you would say like a very good number so far coming out of a lot of these earnings. So it looks like the optimism of Wall Street is kind of marrying up with the pricing at this point. And you might disagree, but it is what it is. It's the way the markets play. Overall, in terms of data center construction, this one's another one here from Apollo chief economist. And you can see here that what he's showing is that we've got kind of like a decline in data center in terms of growth. But just remember, this is percentage year on year. So really what's happening here is we're still seeing, of course, huge data construction. I think I just brought this up just to show you guys the difference in viewing data. Now, we had another one the other day which shows that data centers are overtaking commercial properties and commercial office space, and they're about to have an intersection. So what's happening is, yes, it's a slowdown in percentage growth, but it is still a massive construction when it comes to data centers around America and around the world. Now let's talk stocks for a moment. NASDAQ 100, percentage of stocks above the 200-day moving average from the Wall Street Courier. Yeah, it's declining. So basically breadth is going down. as the markets are going up. Now, this is not necessarily an epic sign of a market that's weak, but it's something to keep in the back of your mind. You always hear people talk about breadth. Generally, at the beginning of a nice cycle, you see kind of the best stocks go through, and then the rest catch up. So you can see here, you kind of get this breadth improvement that gave us all sorts of thrusts. Then you get nice breadth across the board. Often, what happens here actually is you get kind of poor breadth even, because the best stocks start rising and then the rest kind of come with it. Well, in this case, everything rose and then everything seems to be declining in the NASDAQ. And that reminds me a little bit of 2021. So we're going to have to be very careful, because if we are going into a dangerous 2026, which is a midterm year, notoriously bad, by the way, then we're going to be paying attention. Let's look at the dark pools. Couple of monsters coming through in SSO, which is a 2 times levered S&P fund. Last time we saw massive ones like this, we ended up going into some form of sideways pit into accumulation. So remember, it's not so much the transactions, it's the type of direction the market breaks. So if the market goes to the downside, this could mean a larger, more aggressive move, waterfall style effect. But if the markets start ramping up big time, it shows you probably a lot of accumulation occurred. And again, the market pressure to the upside could be big. It's the same thing here on ARK-F, massive transactions all the way through the tops here. Again, we don't know the direction just yet, but we'll see. And semiconductors just getting stacked upon over the last couple of days at near all-time highs. So again, if it starts breaking down, that's going to be a warning sign. And I think probably the biggest one here is silver, because this is probably most likely the good read. And that is that it's a monster transaction, generally happens near the highs. Volatility is spiking on silver. So silver is probably going to chill and decline, at least in the temporary period. Now, I still think silver will go up over time, but again, temporarily it may be weak. Let's have a look at some good reads here for the markets. Most of them are bullish, actually. So when the VIX goes up as much as it has, that's the volatility market, then gets crushed back down. You can see here Subu Trade bringing very similar stats to what we saw in our weekend video, which basically just shows that the next couple of weeks and months usually are quite bullish. So I think for a longer term hodler, what we've just seen recently is not too bad. VIX pullbacks from intraday highs. Again, this is pretty normal duality research here. And you can see here the trajectory looks pretty nice in most cases. So of course that looks pretty sweet. VIX down more than 15%. Again, these ones, even if these are the reads, other than this one over here, almost all of them actually had new highs. And even this one here, the double bottomed, ended up getting a new high. So yes, okay, the VIX reads pretty much across the board, although there might be some volatility next couple of weeks. Generally, it's over fairly quick unless we go into a full meltdown. And I think we'll know, because we'll go into some other stats, and obviously we'll keep ourselves open to all opportunities. XLK seasonality also is pretty strong, especially into the month of November, which is, of course, big tech. So whenever you're looking at markets at the moment, based on the data we've got, things look pretty okay. Let's have a look at the charts now, then options, then the other leads. First up, the S&P closed near an all-time high. It's obviously at resistance at this point, which means that we probably have a positive gamma event potentially just around the corner. The S&P breadth or advanced decline line actually was improving. And you can see here in the futures market action, here are the new options high and lows. Nothing really to report other than what we've been talking about. These wicks were a little bit more bullish. The market is closed here. The market is not above an all-time high, so it's unlikely to be a squeeze just yet. But I think for market bulls, if we get a new high, a lot of them are going to be looking for 7K. And that's because it comes back to the options. Let's have a look at the options. 6750 is the positive gamma switch level, it looks like, next 24 hours. So that's going to be the resistance on the charts as well. Makes sense. It's around those highs. So 6750 to watch, 6700 to watch on the put side. That's where you're going to start getting a bit of negative waterfall effect. We're kind of trapped within that price. And you'll notice here, if we get through this 6750, 6800 zone, what ends up happening? Well, 7,000 is the clear target of Wall Street. That's where all the calls sit. And that's going to be a massive resistance should we get there. Tesla coming into earnings, we're pushing that 450 narrative resistance, optimism into earnings. You can see it. We've talked about it every video, 420, 430 put wall, etc. Nvidia still looks okay on the charts, obviously just like trundling along, waiting for hopefully a resurfacing event of bulls. Now let's move over to the more interesting stuff. IBIT firstly. So Bitcoin is still weak. The general sentiment seems to be buy Bitcoin, buy Bitcoin, buy Bitcoin. at least what I'm seeing in the markets. Now it's coming time where some people think it's going to 30K, 40K, and it's over. And some people think it's going to the moon still. I think it's all going to be in the charts. So there are two key levels we'll look at soon. But yeah, 60 is an interesting point on IBIT as a put wall. And then really until you're above 70, you're not really breaking out of the shackles of a range-bound market. So that's going to be a big one. The other one is gold. This 400 to 405 level. We've talked about this a lot. It is a massive core wall. So basically, this is a huge level for gold. If gold does break on the upside, it could get even more euphoric before seeing extreme volatility. But I will caution anyone, if you're trading in the gold markets right now, if you're early and you're an investor and a position baser, well done to you. Months and months and years ago was fantastic. Now it is the most dangerous I've seen it in a very, very long time. So obviously it's a bit tough out there. And you can see here that we're at that precipice of a very important switch, gold versus the S&P 500. Take a look at this chart here, and what you'll notice is that we have a really, really important zone here for gold to the S&P. What a great combo. Why is this important? Well, it kind of points towards, again, what we've been discussing. While I think gold will ultimately break up here and outperform the S&P, and there are some big ramifications around that that we'll actually be discussing at our free seminar live event. Obviously, it is open just to the Australians out there that are in Brisbane, Gold Coast, that area. I think I got like literally 3 tickets left. So if you're interested, links in the description down below to sign up to that. But you better make it quick. I'm closing it next 24 hours unless we drop some. So thank you very much for the support there, by the way. But this chart here has actually got some interesting stuff. And we'll see what we can do about showing everyone in the world maybe this chart a little bit later on, because I think it's actually got a lot better stuff to show us than just this. But this 0.665 ratio could be like a massive unshackling of gold to the S&P. It could also start some weird and strange events occurring. So certainly at resistance. And again, that's where you'd expect to be as you're getting this much momentum in that sector. What about the bonds market? Well, the bonds market doesn't seem to be too scared there. We've got high yield junk as well. That doesn't seem to be too scared in the markets. Generally speaking here, we've just got bonds being bought up. Again, if the bonds market isn't panicking, I tend not to bother panicking either. I always say if it's in the press, it's in the price. So remember, we don't pay attention to the headlines here on the channel. We pay attention to the flow. US dollar has picked up off its first support. So again, at the moment, it seems like the most likely scenario is kind of pushing towards that 99.85 area. And again, it's bucking the trend of everyone being so negative on the dollar. And then gold, it is volatile, guys. Look at this thing. Wow, there's some big days on it, some big movement. So it's back up to the resistance. Of course, some people now will be like, what is a double top? You don't know that. What we do know is that the 4-hour 20 has been a phenomenal buy. It's at just the same level. So basically, if it comes back down to the 4-hour 20, I'd be very skeptical because that's actually a weakening trend. So to me, it is very volatile. I think that it is not worthwhile speculating too much here unless you're a fairly big madcap. 4,000 is a very good level because it's demand just underneath 4,000 and that daily 20. And silver has actually shown more volatility because it's often the more risk, more reward type of position in terms of the oldest currencies in the world. And you can see here, as we got that large trade coming through, it got crushed, recovered. That is a crushing, by the way. It's pretty big. And again, I don't expect great things out of silver for the next maybe month. It could happen. I'm still invested. I don't care. But the thing is, I'm just warning you guys, this is not awesome kind of stuff to see. What about oil services? Well, a lot of people have been saying, Tom, your barrel call sucks. And I say, well, remember, don't trade the barrels at the moment. I've said all year, geopolitical risk is dangerous in barrel trading. The key is here, and we talked about it in our live stream, is to look at the oil stocks. And oil services actually rallied a little bit here over the last 24 hours. Not bad, up 2.1, back to around that entry area. And of course, we had the trend line breach on the bottom. I'm very interested to see how this performs. There's a chart we'll bring up in the next video when we focus on that, because there's so many things to talk about, where you'll see oil versus gold is insanely cheap. And I don't know why it's so cheap. Well, I do know why it's so cheap, but I think it can't stay there forever. So it'll be an interesting one. You can see here Tesla chart's actually quite interesting to the bulls, breaking out of this kind of range. So again, starting to push the more bullish narrative. It certainly looks more bullish than bearish, but ultimately earnings will be the caller on that. And Chinese stocks, boom, goes. Yeah, that's a great buy. I mean, how much is that already up? So if you got that low, even it's a 5 and a bit percent, not bad. So the Chinese stock market's still doing quite well. That's driven by liquidity. The Russell 2000 still doing all right, even with everything going so bad. And that's because biotech is doing very well. You can see here IWM versus SPY continuing up, as we talked about when this ratio broke. It gave us an idea that the Russell may beat the SPY. That is ultimately bad for the market, but we'll talk about that for another. That's a story for another day if it continues up here. And you guys can see again some performance there. Let's have a quick look at NVIDIA, and no real updates here on NVIDIA, guys. Still around that kind of key consolidation point. Let's move over to the NASDAQ. Resistance, first major. Look at this thing. It is absolutely topping on again and coming back up to that area. The trend is up. The flows are up. The rally seems to be up. The markets seem to be terrifying everybody in terms of the press. So you got to be, generally bullish. It is what it is. And the thing is that we really don't know quite what's happening at the back of October. But remember, even if we get a 5 to 8% pullback, it just seems like there's so much money still to be jumped into this market. The key, though, I think is going to be leverage. And heaps of people are levered right now. Let's move over to Bitcoin. Now, this is definitely a weaker chart. And I would like to see, actually, I'll use this first one because I've done the analysis here. So there are a few levels that I think are very interesting. And you can see here the anchored VWAP off the lows. That one is a classic. We've also got the weekly 50, which, of course, old Scottie Pippen's loving. And then we have, of course, a retail low still. I like this area here for some form of bid purchase if it does go that low. I actually think that could be where things get kind of, very interesting for a decision make. The other one is just goes above, 116.5 and we get a new all-time high and we keep going. And then the question is, are we going to get that 200 to 250K by the end of the year? The one thing about Bitcoin is it can surprise people. Technically, the halving cycle concepts are coming to the end. So what a massive decision. Possibly the biggest decision ever for this asset class, because it's the time that it could break what has been known as one of the most consistent cycles of the last decade. Guys, if you enjoyed today's video, then please remember to subscribe. Remember, if you're interested in coming to the Brisbane trading event, I'm seriously closing that thing in 24 hours. Thank you so much for the support. Much appreciated. A few of you other guys tried to sneak in there, though. You can't come if you're not from Australia, or you can't get here. It is a physical event. Please be aware, because that does create some nastiness in the forms. But appreciate everything there, guys. Thank you so much. Follow me on X. Follow me on LinkedIn. Thomas Atkinson over on LinkedIn. We'll be posting there, and also we're activating the newsletter as well on Thursday Thursday my time, so after the Tesla earnings, because we'll be doing a bit of a special there. So make sure to check that out as well. Thank you so much, guys. You have a fantastic day. And yeah, these markets are just getting started. 2026 is going to be a year of madness. I'm telling you, sub to the channel. We'll see you then.